the way I've approached the conversation is I've taken it more from like an insurance or risk point of view. And I've put it really as simply as, if Bitcoin becomes the predominant currency that the world operates on, for all those that don't own some, it will be financially catastrophic. And so to have as small an amount as even, say, 2% in this portfolio, what we're helping to do is actually de-risk you to hyper-Bitcoinization.
Who's your team?
Liverpool was my team.
Oh,
So,
nice.
yeah, the season's going overall well. A little
Yeah,
bit kind of a falter recently, a few too many draws for my liking, but it's
yeah,
been a pretty good year so far, season
yeah.
so far.
Have you
Fingers
ever
crossed.
seen a match in real life or?
Well, I've seen a few matches in real life, but of Liverpool, only one. It was in Melbourne, at the MCG. It was a friendly game against the Melbourne Victory, so it wasn't exactly, shall we say, quality, but the atmosphere was amazing, having about 85,000, 90,000 people there
Yeah,
singing "You'll Never Walk Alone" was, yeah, definitely goosebumps.
yeah.
But I
That's
need to get to Anfield.
Yeah, that's awesome, man. Well, hey, Joel, welcome to the Transformation of Value. It's awesome to have you here, and I am keen to dive into what you're doing with financial advice and talking about Bitcoin back in New Zealand. I do recognize the background
Yep.
of Wellington there behind you, and I guess maybe we could start by way of introduction in terms of your
Hmm.
background and how you learned about Bitcoin, if that's okay, please.
Sure. Yeah. So probably my introduction to Bitcoin was uh, in reality, through a friend who was also and still is a financial advisor. Um, I think I bought $20 worth of Bitcoin off him. I get paid him in cash. Dodgy old cash transaction.
Nothing dodgy about
uh,
cash.
yeah, and yeah, he sent it to me through good old Cryptopia, which obviously I think some people have just been able to get some of those assets back. I haven't really gone through much effort for $20 worth of Bitcoin. It was, I think, at the one of the peak around 2017 that I bought it. Definitely had a play in the crappy end of the market, shall we say, with some absolute trash to speculate. I was really fascinated by how the whole market making system that they had actually in place was working. It was pretty impressive for what it was. It was incredibly tough to follow because you're entering so many decimal places when you're trading Bitcoin against anything else that it was just a nightmare to use. But it was fascinating. So that was kind of I guess, my foray into crypto in general. And I probably would say I was in the camp of misled people who was kind of saw Bitcoin as really the sort of groundbreaking start, but there would be others that would come that would be essentially better, and that Bitcoin would kind of fade away. But that if you have that view, generally it's because you're looking at Bitcoin from the wrong angle. You're looking at, the most technologically advanced or technologically efficient as your starting point, when actually that's not addressing really the root cause for why Bitcoin or any cryptocurrency is actually even worthwhile in the first place, which obviously Bitcoin does much better. But
Yeah.
anyway, so that was, I guess, my entry into familiarity with the world of Bitcoin, but not really in a meaningful way.
Yeah. And
Um,
how did that sort of dovetail with your financial advisory? Because you mentioned you brought
yeah,
initially off a financial advisor, a friend of yours. I
yes.
mean, what was your experience like starting, working in that world, and
Hmm.
how did that sort of change your perceptions of Bitcoin?
Sure. Well, I think throughout most of that time, and still to this point in time, there is huge skepticism of Bitcoin in the New Zealand financial advisor world, certainly with those that are older, certainly with more well-established companies, because they're afraid to sort of push the boat out or do anything that might jeopardize their sort of market leading position. It's a typical thing. You see that same sort of issue over and again in every industry. Um, Afraid of disrupting themselves, basically. So, yeah, at that point, I was much more interested in it, but there was no real way to buy it for clients through the, I guess, systems we had access to. There was no, until start of last year, a year ago almost exactly, actually, there was no way to buy access to Bitcoin other than really through MicroStrategy in a way, through traditional financial markets. And I had a lot of clients that actually, during the last bull run, were really quite keen to get some exposure and were asking me for, how can I go and buy Bitcoin? But there was no way for me to really give that sort of advice or anything under where I was at. It was just way outside of the scope of what we could do. So yeah, the involvement for TradFi for in New Zealand has been very, very minimal up until a year ago, and even still really is quite minimal. Be interesting to see how January 20th potentially changes that, or following on from that.
Yeah. Well, interesting. So going back a step then, maybe we can talk a little bit about the state of financial advice in New Zealand, because cynically speaking, for me, I wonder whether it amounts to pretty much, borrow equity from your parents to buy a house and don't be poor. And, is there more nuance to it? And I mean, obviously KiwiSaver is a vehicle that we have in New Zealand for people to contribute to, kind of like, towards the retirement or their first home.
Yep.
There's analogies with what's available in the US in terms of, I think 401k is what they call it. But we have KiwiSaver in New Zealand, and this is the vehicle we have. But pretty much the New Zealand economy is these houses. And so how would you sort of couch that overall? Is it all pretty much everyone's trying to sing from the same song sheet of houses and don't be poor, or is there more to it?
Probably for the most part, yes. There is a normalization in financial services in general. That KiwiSaver, your journey is you're saving for a first home. You make some withdrawal for your first home from KiwiSaver and some other cash savings. Possibly it's the bank of mum and dad, like you alluded to. We get that first home, we spend all of our money and go into debt, and then we, restart the process of building some wealth for the future, often through some sort of fund that we don't have much understanding of or interest in, and that's kind of it's as simple as that. But definitely seeing more change, more interest from people in not doing that exact journey. Had some really interesting and very cool conversations with clients where, for example, one in particular, I won't mention their name, but if they listen to this, they'll know who they are. Their approach was they wanted to use KiwiSaver as a multi-generational wealth fund. I thought that was a really neat view on it.
Yeah.
This isn't money that I'm going to rely on for me. This is money that is going to be used for the future, for my kids and hopefully their kids as well. And certainly more and more interest from many people around New Zealand to have a bit more control over where their money's being allocated, not just to kind of your bog standard growth fund or aggressive fund. But New Zealand overall is still very financially illiterate, and you've got people with a huge amount of money still sat in the bank, term deposits. The US is really focused on the share market, which is kind of another step ahead of New Zealand, who's still really baby steps property and bank deposits, unfortunately. And then I guess we've got the future in some ways, really, of Bitcoin crashing that party a bit, and that's definitely changing the landscape of financial advice in the US, and I think starting to a bit in New Zealand, but it is still very early days,
Early
really.
days. Yeah, I was having a talk with somebody, and they mentioned there was a staggering amount of New Zealand dollars that are sitting in non-interest-bearing accounts, and I don't know the exact figure, but it seemed as if it was really a case of, well, you could just move some of these funds to a term deposit or to some kind of interest-bearing account, and you would, be doing a lot better.
Yeah.
And I think alongside that, there is this kind of conservatism. And you just have to look at some of the personal finance advice, kind of informally that goes around. And it really is this kind of struggle to get onto the housing ladder, which I think is problematic in many ways. But, because you sacrifice a lot for that. And it's ultimately a non-productive thing. And it's sort of kind of a rigged market, as you know. I mean, New Zealand, just as Australia, Canada, many of these countries are going through this kind of simultaneously this housing crisis, which somehow feels like it's connected with the money printing. I don't know about you, Joel, but I feel like there's some connection there. And so it's sort of this conservatism, right? And I mean, how have you reflected on that as I guess as a young person? So, working in financial advice, maybe there's a lot of established dogma.
Yep.
How have you sort of, yeah, how have you come into seeing all of that?
Tough question and a big one as well. Yeah, I think, um, for me, a lot of my financial advice is led by what the clients want as
Okay.
goals, what they're trying to
Yeah.
work towards. So there is still very much a mindset of, yeah, wanting to work towards buying the first home. But I guess increasingly people are I think especially Gen Z are especially going, you know what, I'm not in a huge rush to buy the home. I actually do see there's a lot of cost there. It's not all rosy. It's actually, it is tying me down to a place, giving me less flexibility. And so more and more, less of this kind of roadmap of I'm going to buy a home at this age, liquidate everything to do it, slowly pay down that debt, and kind of have a mundane life, so to speak. There is, yeah, there is less of that going on. There is gradual shift, and I think it is things like uh, interest in Bitcoin and what's going on there, and for that generation, seeing how things are in the US. You talked about property and the connection with issues with the money, and yeah, absolutely. The banks lend, effectively create money supply. Lending is pretty much all going towards property. Um, you know, the property market overall is fairly leveraged. In New Zealand, interestingly, and as a slight tangent to that, really quite pronounced from 2020, 2021 through till, last time I looked, it was about 6 months ago, was the number of, back to KiwiSaver withdrawals that were due to other reasons than first home, due to death, illness, terminal illness, or moving overseas permanently. These numbers are tracked and published by the IRD. One area that absolutely skyrocketed following 2020 was withdrawals from KiwiSaver due to other reasons. And that really is two things. It's one, either someone has been fraudulently contributing in there based on from their business, and they, due to legal action, are forced to basically release the money. The other, and much more common, is due to separations.
Mm.
And I think following COVID, huge amount of tension in many homes, a lot of separations, and I've seen it personally from a lot of clients I work with. What was used to be, mum, dad, and three kids is now mum and three kids and dad and three kids, and they're each in a 3 or 4 bedroom house. And so you've had this kind of massive sudden increase in demand for housing that occurred at the same time as interest rates being super low, which kind of I think has helped to turbocharge that market at that time, and is why we've seen it come back like we have. And there's really often this thought of, okay, well, the housing market's going to go again because interest rates are coming back, but that sort of sudden increase in separations due to a specific event, that's not necessarily going to happen straight again. So I think, as people see that the housing market isn't so much the silver bullet, that sort of fixation on that being your first sort of real life milestone financially, I think will change as well.
Yeah, that's fascinating because I think that would speak to a certain generation of people who have maybe got kids who are a little bit older. There's sort of an era of people there that maybe are in a position to easily move into another house. They've got established careers. They can get the loans and things required for that, which again makes it much more difficult yet again for the younger people coming up who are trying to get just started, maybe just a couple, without kids or something like that. So that's an interesting point. Those KiwiSaver withdrawals for other reasons, and I guess bringing it back to the Bitcoin piece. So this is very interesting, right? Because from my perspective, I feel like New Zealand is still very much behind the ball with with Bitcoin. Everyone is still talking about housing, and there's again this kind of magic, this allure to housing. There's something about it that it's tangible in a sense. People feel like they can hold on to it, and that's maybe at the expense of learning about Bitcoin. But what are your thoughts on how advice and financial advice can be given regarding these other things such as Bitcoin? Like, how do you begin the conversation with someone about that?
Yeah, good question. How do you begin the conversation? I think it depends on you. Well, so for me, I'll put it from my point of view, like working as a financial advisor and how kind of I've approached it with clients, which is perhaps helpful. So I guess each financial or every person tends to be either more logic leaning or feeling leaning. If you know the whole Myers-Briggs, T versus F kind of thing. Well, I think naturally as a financial advisor or any really sort of person-to-person business, you tend to attract a lot of people that are like you in terms of how you think. And I guess I'm much more sort of like a logical type. I try and when I'm providing advice to people, lean less into the emotion and more into the logic side of things. So it kind of starts there for me in explaining to clients why I think it's worth having. So the way I've kind of just approached it, and I think the Bitcoin community in general, because of the sort of um, sudden realization of what Bitcoin means, many of them, they almost get like a religious fervor about Bitcoin, and it can be a real turnoff for people. And you've probably experienced that, or you've witnessed Bitcoiners who are like well-meaning, and they're basically trying to preach to to the unconverted about the great the greatness of Bitcoin, and it ends up being like the thing that people are like, nah, this feels too kind of religious. This is a turn off
Yeah,
almost.
yeah,
And I think it kind of it unintentionally does a disservice to Bitcoin when there's actually ways to approach that conversation with people um, without being as kind of religious about it. So the way I've really talked to clients about, and you're never going for someone that you're never taking them from 0 to 100 ever. It starts with baby steps, as pretty much all of us probably have been in our journey with Bitcoin. So for say I have someone that's retired, they're in the retired years, they don't want to take on board too much risk, they don't want to be subject to too much volatility, and that's another conversation that I think would be worth talking about. Um, and so, but you want to be able to give them some exposure to what you think is going to be actually beneficial to them, frankly, which I do. I think having some Bitcoin exposure for everyone is really worthwhile. The way I've approached the conversation is I've taken it more from like an insurance or risk point of view. And I've put it really as simply as if Bitcoin becomes the predominant currency that the world operates on, for all those that don't own some, it will be financially catastrophic. And so to have as small an amount as even say 2% in this portfolio, what we're helping to do is actually de-risk you to hyper Bitcoinization. If Bitcoin becomes the currency that everyone uses, or the full backing to whatever, however people do money, then by even having just a small amount, you're going to substantially de-risk yourself to what would be effectively complete loss in everything in bonds, because if US dollar, New Zealand dollar, Australian dollar, pound, yen, etc., if they're all effectively worthless, no one wants them, well then that means the entire bond market basically dies a death, and that would be huge. That would have huge contagion impact, because that's a huge market, bigger than the share market in total. Balance, so sort of medium risk through to low risk portfolio down, all of them have substantial bond exposure. So if you're someone that had essentially half your wealth in bonds effectively overnight, that's kind of worthless in value because we've had sudden hyper Bitcoinization. Bitcoin's the go-to currency. Then you're leaving a chink in the armor, really, should that happen. And it's obviously, you and I know it's non-zero. For other people, they think it's like really minuscule of a chance. But the fact that their financial advisor is going, well, actually, let's just do a small amount. Look, if you lost it 2%, you're not going to lose sleep over a 2% fall. It's only going to happen once. We're not talking about 2% loss every day, every week, every month, every year. It would be a one-off 2% loss. You're not going to lose any sleep over that. So let's have at least that much there. Then we're de-risking you to that eventuality. So it's kind of flipping on its head from talking about, oh, the amazing gain, to we're actually helping to protect everything else there. And then when someone's actually got some stake in it, and yes, the ETFs aren't quite as ideal as being, in your own custody. Realistically, for a lot of the 60s plus generation, not all, and no offense to anyone that's in the 60s plus listening to this, there's some that are very capable with the tech side of things, but talking first-hand conversation with this demographic, the vast majority are never going to go and do self-custody. They're just not. And so they're going to have to do custody through some sort of means. And the first instance, a Bitcoin ETF is a pretty simple, accessible way for them to get some exposure. And hey, let's hope that the quality, the ease of what's offered there improves over time. But we've got to start somewhere, and this is a really easy, accessible way to start. And I think this is happening a lot more in the States. I don't know about financial advisors in the States and their conversations with clients and how they kind of couch it, but I've found that to be the most effective way to approach it, because they kind of get it from that point of view. They're like, okay, oh, my financial advisor thinks it's plausible that could happen. It's within the realms of possibility. That's enough for me to, okay, yep, I can understand. 2%, sure, I'll sign off on that. And then when it comes to that annual review with that client, oh, let's look at how the portfolio's performed. Which part delivered the best return? Oh, it's the Bitcoin ETFs. So there's some pretty happy clients as a result of that, following that nice run we had into December.
Yeah, that's fascinating. I wonder, just going back a little bit, and you might not know the answer to this, but I'm curious about the history of financial advice in New Zealand, because I get this gut feeling that maybe this emphasis on index funds and KiwiSaver. I mean, I remember when KiwiSaver came out, back in the day. Back, I think I was still in school, but it didn't exist once upon a time. It's a relatively new thing. Do you know,
2007.
like maybe in the 80s or the 90s, like what did people used to do? Was there a financial advice market back then that you're aware of, and like what sort of paradigms were they operating in back then?
Yeah, well, I mean, going back to the 80s, 90s, the accessibility of world money markets was much, much less. I mean, the internet obviously has been the big catalyst for people to just easily get much greater exposure to kind of anywhere they want to, really, in anything. 80s, I mean, the New Zealand share market was quite a wild west then. You had a lot of just basically paper companies, that were very low quality, and we had in the 80s a pretty substantial share market um,
Oh, the crash.
rally, in
Oh,
which, yeah, you had
led to the
people, and
crash.
I've had a lot of these first-hand conversations with clients who lost money during that time, or their parents lost substantial money in that time, where people were maxing out the credit card. They're like leveraging everything, maxing out debt everywhere they could to just buy, to invest into companies that, because everyone else was. And it was really, no different, I guess, to like a bit of an altcoin pump and dump, essentially, in many ways. I mean, yeah, what you're buying there was effectively paper, a bit of a bag, a company that was valued at crazy multiples of the actual underlying earnings, like, taking like hundreds of years of profits to be able to effectively repay the investors, which is just a crazy, investment. And then, of course, share market crash occurs, and when things crash, they can crash hard if there's a really big bubble created. I mean, GFC is a good example of that. And so that really burnt quite a generation, I think, on the share market in general. And they then kind of applied that same view of the New Zealand share market and how it had been to kind of all shares everywhere. And I still to this day have conversations with people that go, oh, I think shares are really, really risky. And this person's like running their own business and all of their wealth's tied up in their one business. And I'm saying, yeah, but you could effectively invest in like the 100 largest companies in the world versus having all your money in your one business, which is entirely tied to this one small region, which if there was an earthquake, you're basically gone. And it's like, it's still this kind of disconnect of risk. And I think it was from that it was born, and I guess it's back to the New Zealand DIY kind of culture of we want things that are tangible that we can touch. And obviously this is then a flow-on issue for Bitcoin as well. And people are risk averse in that way because there's not an understanding.
Yeah.
Um,
Yeah,
yeah,
that's fascinating, because I think just sort of secondhand accounts of the 80s, and New Zealand's opening, I think, of that whole sector is relatively new. I mean, it was really only in the 80s and early 90s when you could even do stuff internationally. Prior to that, it was like it all went through the Reserve Bank, foreign currency, everything. You couldn't actually touch it. And I think that's a very interesting story, and I think maybe for another episode potentially, but that'd be an interesting study, like what was the paradigms, and then that led into I mean, housing, and
Yep,
maybe sort of post. I'm just trying to think when KiwiSaver came out, but this kind
2007.
of YOLO into KiwiSaver and then into housing, and that seems to be, I get this kind of paradigm that is prevalent. And I wonder whether we're starting to see the emergence now with the United States sort of leading it, but the new paradigm of, well, actually this entire stack of, housing, property, shares, nation state currencies, that's actually maybe a risky position to be in. You should consider what is also available now with Bitcoin. And maybe there's other people out there still talking about things like gold and commodity metals and things. But I think the fact that that is now an option, and that's actually quite a promising option, means that prudent advice should speak to that, right? Which sounds
Yeah,
like it's sort of what you're doing.
I think where a lot of financial advisors struggle at is it comes down to this. So if you're going to recommend to someone they do anything, there needs to be some
Yeah,
sort of basis, right?
yeah,
And if you, for starters, you just have a view, a base view, like a world view that Bitcoin is a Ponzi, then you're never going to recommend it
so
in a
anyone, yeah,
portfolio, right? But even if you don't, even if you're open to it and you go, okay, yeah, I would kind of like to give clients access to this. For an advisor, the question comes, okay, well, how do I sort of justify how much someone should have? Like, what's the basis for that? And I think for many people, they mistakenly will use like the past returns of Bitcoin as a justification for the future. Um, and I can understand why people do that, but and there's so many instances for why that's not a good way to approach things. If you look at just the world of everything traditional finance, every company that has gone through having substantial, amazing gains over a period of time has often then at some point died a death. Very few companies last forever, virtually none. At some point they die because they have bad leadership or they make bad decisions or they get too risk averse and they die because they're not afraid to disrupt, they're too afraid to disrupt themselves. Kodak, classic example. And so because of that, while the past returns have been good, that's justification for why it's really been hammered. The regulators really opposed to that, and I think fairly so. The the reason for the returns in Bitcoin, or the reason for expectation of future returns, is driven by not really driven by what the past returns have actually been. It's driven by why there has been those past returns, which is basically that people see it as the future of currency and as a solution to the current monetary system that we have. And were it fully adopted, then you can actually start to, um, I guess, build an estimate of what you think those returns are. Like if Bitcoin becomes the world currency, all fiat currencies die to it. All value that's currently stored in those is tipped in, plus some from gold, some from equity as well. Then you can kind of get to a number of, okay, in today's dollars, this is kind of a most bullish of bullish cases, what Bitcoin gets to. And then, okay, well, what's the effective return from there to now? How long could that take to potentially take place? Or how long would it need to take for it to be worthwhile to have any exposure to it? And then you're getting like an annualized return effectively that you can work back from. Hopefully people are able to follow that. But yeah, and so you kind of get to this point of, okay, well, if it took basically 40 years for Bitcoin to become the predominant world currency and for that scenario to play out, and you could discount it based on a likelihood, you could apply a likelihood if you think whether that's, happens or not. You get to this point of, okay, well, over the next 40 years, if it took 40 years for that scenario to play out, in 40 years' time, where fully, everything's Bitcoin in terms of how we do money, then I think the number worked out to be something like 30% per annum returns between now and then. I guess when you start to build some numbers around it, you as an advisor can find a place for it in a portfolio. But because it's still emerging, it's like the crossover between the world of traditional finance and Bitcoin. There's still a lot of straddling going on for any of us involved in that, right? You're kind of straddling two worlds really in a way, and there's no kind of easy way around that for now. That in itself actually is a big reason for why many advisors are kind of like, nah, it's too hard basket. We'll do it when everyone else is doing it. So there's that as being a big roadblock for adoption. But yeah, again, because it's still emerging, there's a kind of a lack of, I don't know, like research or justification for what sort of percent or what bucket it fits within a diversified portfolio, which is, the way that traditional finance works to. And so, moving to a world of hyper Bitcoinization will completely, change and disrupt a lot of those models. So if any advisor working in the kind of two worlds in a way, it's not a simple, easy, cut and dry answer, and you're going to have to come to some sort of position or some sort of recommendation that you're prepared to stand up in front of public or in front of a judge, basically, if it came to that, and say, well, hand on heart, this is why I recommended it, and I think I was acting in the best interests of clients. Should it all go pear-shaped? I don't think it will, but you really have to have conviction.
Yeah, that's fascinating.
So
And what you said, there's sort of there is a lot of different ways of looking at it and sort of modeling it, and it's also true that all your models are broken at the same time as well, because who really knows, and it's hard to say. Is it 40 years? Is it sooner, or is it some new kind of thing entirely?
I think it happens much sooner than that. It's not. I'm not betting on it to be much sooner than that, and I don't think you actually need to. The great thing about Bitcoin is you can approach it with just a patient accumulation mentality, which is a good mentality. I think it teaches patience due to all the what have been some tough cycles or some tough drawdowns. I think it happens much sooner than that, and the reason I think it happens much sooner than that is we're seeing it growing in relation to sort of world wealth. There's more and more money being tipped into it. And yeah, what happens in a week or so is going to be once the US have this potentially implemented this Bitcoin strategic reserve. I'm not banking on Trump definitely doing that. He's in the past promised lots of things, and so I'm not going to build my entire belief for the future based on him and what he says. But if that does happen, that is really going to be catalyst for pressure for other nations to follow. And I think you get to some point in the future, whether it's this cycle, next cycle, 5 cycles from now, if cycles are still a thing, 5 cycles from now, you get to a point where there will be like that tipping point, like cars in New York. That famous photo, the 2 photos of the horses. It was in New York. I'm pretty sure it's New York. One year it's horses, the next year no horses anywhere. It's all cars. And I think some people think that it will happen slowly. I've heard Bitcoin talked about as being the peaceful revolution. It's going to be peaceful until it's not. And that's not necessarily a bad thing. I'm not saying it's going to be violent in terms of like physically violent, but I think it's going to be violent in terms of how much it flips people's lives upside down because they weren't prepared for it or expecting it. And it will be slow, sudden. I think that's my prediction for how it kind of plays out. I don't think it'll be 40 years, but if it does take 40 years, that's still going to be a good return for anyone that had exposure for 40 years. So
Yeah.
yeah.
Well, that's fascinating. So coming back to this idea then of financial advice, what's happening in New Zealand, maybe people's conservatism about this. I wonder what are the organisations or entities that exist in New Zealand for this kind of information, I guess, professionally to be disseminated? I mean, the financial advisors out there, there's many of them talking to Bitcoin, many of them who are not. What is the way that they communicate and kind of share this professionally within, I guess, the world of financial advisors? Is there an entity for that? And
Good
do
question.
do they recognize it?
Is there an entity? No. The way a lot of advisors sort of get together or communicate can be through industry events, which can be put on by different sort of organizations that advisors could belong to as a body. It could be put on by the supplier of different investment products, but of course they're mostly going to talk about what they already do or they're looking to do. So unless they were deciding to kind of go down a route of offering that, I think there's going to be an opportunity for financial advice businesses, providers, to be able to kind of do a bit more of that themselves. In time with a business with a bit more scale, that's certainly something I'd be open to.
Interesting. Yeah.
But
So there's
yeah,
no
it's
industry
baby
body
steps.
for financial advisors.
Well, there is, but
Oh, okay.
I mean, they're not really talking about Bitcoin at that level. There's still heavy skepticism of Bitcoin in general within financial advice. So um, yeah, you might as
Yeah,
well get them to trying to talk about art. Um,
yeah, yeah.
well,
Well,
actually, that's probably easier.
yeah. Well, the reason I asked though is because this situation, which I'm certainly feeling, is that New Zealand is being left behind, and people are holding on to their plaster board and rotting wooden houses in these new suburbs of Auckland. Yet they're missing the revolution, which is Bitcoin, which demonetizes quite a lot of that stuff, and it's sort of a bit of a disservice maybe to New Zealand. And I wonder, I mean, maybe we see this in the coming years. There may be more sort of information being disseminated through these professional organizations. But interesting to hear from you that that's not really a thing. But what I did want to ask you, Joel, as well, just on a technical level, with what
Hmm.
you're able to say and what you're not able to say, can you just share a little bit in terms of what the framework is for financial advice and Bitcoin? Are there off-limit areas? Are there things that you can't do? Like, can you give us a bit of an idea of what that looks like?
Sure. Well, yeah, it's a very tough one, because it's still quite an area that's fairly unregulated. The Financial Markets Authority is a regulator of financial advice in New Zealand. They generally have overall a dislike for cryptocurrency in general. Fair enough. For a lot of it, there is basically theft and nothing more. But then there's this kind of great lumping together of everything, right? Which I think many of us who have any exposure to Bitcoin have experienced. People go, oh, Bitcoin. I got sent an article by a client recently, which is someone from The Guardian writing about cryptocurrency in general, and Bitcoin is kind of caught up in that slander, and it's trying to explain, well, they're a little bit different, but anyway. So I think, yeah, there's a lot of grey. Like, to give you an example, from the insurance side of things. So as a financial advice provider, as a business, you need to have some professional indemnity insurance should whatever go wrong. Pretty much all of them exclude anything to do with cryptocurrency in general. Some of them have like complete hard, will not cover advice on any area of crypto, even Bitcoin ETFs, which are about as regulated as you can kind of get. Others, apparently, according to my own insurer, think that it would be fine if there were any issue because it's through kind of a regulated means. So I guess that's a roadblock already. Like, advisors kind of go, well, I'm going out on a limb. You know, I don't have a huge amount of knowledge in this area, and there's an expectation that as a financial advisor, you really need to have knowledge on what you're providing advice on. So for starters, if there's no knowledge there, that's a roadblock. If there's no cover there whatsoever, then that's a roadblock, because as a financial advisor, you make one stuff up, you don't rectify that stuff up well, that can be your career over. There have been too many, sadly, financial advisors in the past that have basically just defrauded clients, have stolen money from clients, sometimes in very clever ways, sometimes in really stupid ways that unfortunately people were, susceptible to. And so, there is a really intense focus from the regulator to ensure advisors are acting with basically good character and giving advice within their means. So because of that, there are a lot of advisors out there that just don't want to go to Bitcoin area because they just feel like there's less support for them there. Something happens, especially advising anyone around taking custody, of their own Bitcoin. You make a stuff up there, that you're not going to get any coverage from your indemnity insurer there. That then spirals to complaints made, goes through a dispute resolution scheme. Who knows what the outcome of that is? You've got unhappy clients, means media coverage, means potentially the slow or fast death of your business. So it's an industry that has a high amount of publicity when things go wrong, and every advisor is very aware of that. And so every advisor is, well, not every advisor, but most advisors are very, very risk averse as a
Mm,
result of that.
yeah.
Um,
Well,
yeah.
so on that note, then, so I guess because the question of self custody versus ETF products, then, so do you think then, from a financial advisory perspective, something like KiwiSaver exposure to Bitcoin, ETFs, etc., is maybe more prudent for someone who's maybe not super technically competent, or do you suggest self custody in some situations? Can you share maybe your perspectives on that?
Sure. So I guess as far as my advice goes, I haven't gone to the level of recommending for anyone self-custody, primarily because those that are coming to me wanting some Bitcoin exposure through KiwiSaver, for example, they're already doing that anyway for the vast majority. So they're already quite au fait with that. So I don't really have to do anything by the way of recommendation there. For those that don't have any exposure, it's kind of like too much of a step generally. So like, a Bitcoin ETF exposure through an investment portfolio or through KiwiSaver is generally like a much better first step that feels a lot less scary to them. So, and that's still in infancy really, because we've only had a year of Bitcoin ETFs being an option. And often it takes advisors a bit of time to respond to changes and things becoming available. There's only a year of returns history for this ETF. I mean, it's returns history for Bitcoin for what, 15 years? But so, these things unfortunately take a bit of time. For me, how I've generally approached it is someone coming to me saying, hey, yeah, I want some exposure to Bitcoin. That then makes the conversation much simpler because it's basically a goal that the client has expressed. Now, what's really of key focus for financial advisors is helping to meet client goals. A goal can arguably be just about anything. There's no real black and white definition of what a goal may be. So if someone's coming to say, oh, I want some Bitcoin exposure through KiwiSaver, well, one of the only options for that is essentially those Bitcoin ETFs. Give you some allocation to it. They might have said, I want X percent. Cool, we can make X percent happen. That is a very clear, very measurable meeting of a goal, because it's black and white. They've said, I want this amount, and I've delivered that and said, okay, well, here's some of the risks. Almost always, they're very, very well aware of these risks anyway. They probably deliver all that stuff to me rather than the other way around. But, as a financial advisor, you have to make sure that you're covering every part of the conversation, that you're not just going, oh, here's what the returns have been, here's the risks, here's the disadvantages, here's the limitations, etc. So if someone's coming with a really clear goal of, I want this, I understand what I'm getting into with this, then okay, cool. We can help deliver this. And it's been really interesting to me that basically no other advisors in New Zealand, or very few, probably from what I know of, there's maybe 3 of us out there with operating anything like this, because no other advisors want to touch that. They mostly want to stick to kind of, a safe model portfolio, well-tread road, the safety in numbers kind of thing. Means all of those that are looking for something that isn't that are kind of then being sent on to myself and advisors like me. And it doesn't necessarily need to come from a great deal of stepping out and taking on board a huge amount of risk from a compliance point of view as an advisor, if someone's requested that. So my hope is that there'll be, I guess, more and more people learning about what Bitcoin is, and then coming with an express request, understanding it, to have it as part of a portfolio. But I think it's also part of a bigger conversation, a broader conversation, broader issue, that New Zealanders don't understand risk well. They don't understand volatility well. And I've had lots and lots of conversations over years of helping people understand that when you're invested in an asset, be it even property, be it Bitcoin, be it shares, it's not just going to be a straight line return. Anyone that's had a cycle in Bitcoin understands this well. But for so many people, they're so used to even the finance companies that we had of, I'm getting 8% per annum guaranteed until the company collapses. And so they kind of have in their mind this straight line return of 8% per annum, blah, blah, blah. And anything other than that kind of feels unsafe or risky, when in my view, actually it's safer because it's reality. No company goes through just perfect straight line growth, right? So if what you own is reflecting reality, I think it's actually a much safer thing. So it's like there's still this lack of understanding and being comfortable with risk, and risk being volatility, and volatility being a good thing.
Yeah, no, that's fascinating. And just to come back to your point about, um, yeah, advising on KiwiSaver exposure to Bitcoin, I think that's very interesting because it's kind of a foot in both worlds.
Yes.
You kind of meet people where they're at, and I think there's a lot of value there. As you said, there's a lot of safeties in place that mean that it's kind of hard to mess it up. And in the self custody thing, I mean, that's just another way of accessing it, right? And maybe it's not for everyone, as you say. If there's people who are maybe new, they don't fully understand Bitcoin yet, that maybe they can learn about that in their free time. But right now, today, what can you do? You can get exposure through your KiwiSaver fund. And I want to talk about that because I know there are a few funds out there that give you exposure, though some of them are capped as to how much you can you can get. And for maybe Bitcoiners who want to also just go and max out their KiwiSaver, 100% Bitcoin exposure. The ways to do that. Can we talk a little bit about that, and in particular
Mhm.
KiwiWrap? Can you share your
Yep,
thoughts on that, please?
sure. So I'll start with kind of effectively all the options that are out there. So we've got about 30 odd KiwiSaver schemes in New Zealand. Um, there are about 4 or 5 off the top of my head that have any exposure to it whatsoever. Um, Colder KiwiSaver schemes, obviously, I think pretty well known to most in the community. They've been fulfilling a great gap in the market there. Have a lot of love for what they're doing. So they allow people to go up to 10% in their Bitcoin fund, um, and that they've had a lot of back and forth, as I understand, on that with members and with the regulator. I guess from the regulator's point of view, their concern is someone, goes 100% Bitcoin because they've seen how well it's done for the last 12 months. That person doesn't understand volatility or drawdowns. The drawdown occurs, they get spooked, they sell out at the bottom, crystallize that loss, and that's leaves someone in a worse position than they started. So that's kind of where their mind is at, because they're there to try and protect people. Obviously, not everyone needs protecting like that, but there are a lot of people that still do. Um, so that's kind of, I guess, to explain the kind of the balance of issues at play, and because I've heard both sides a lot, and I understand where both sides are coming from. The other options that are out there don't have so much of a pure exposure to it, but NZ funds have which anyone that's a Bitcoin maxi will probably gag at, which is it's a Galaxy asset management liquid crypto fund. Uh, it was actually frustratingly difficult to find info on what's in there. You have to put in when you go to the Galaxy's website, you have to put in all your details, your country, your investor type in order to get an idea of what asset allocation is, which is just a turn off for me. No thanks. But that's in one of their growth strategy. I think it was about 3% is in that. So if you're in that fund, you don't have it in NZ Funds growth strategy. You don't have the ability to choose whether you have more allocation to that or something else. It's within that fund. Pi funds as well. I hadn't realised until more recently they have IBIT, the BlackRock ETF, in their growth fund. It's 1.4% allocation there. So we're not talking big numbers. But just to give you a picture, I guess, of where sort of Bitcoin participation is at within KiwiSaver. And they really have been the main three. KiwiWrap, which you mentioned, they are, I guess, a bit more of a boutique KiwiSaver scheme, so to speak. Uh, I think they've really been trying to do a lot of what really is occurring in Australia, the US with 401k, etc., with allowing people to have a bit more control on asset allocation, a bit more self-select. They have, as a scheme, two conditions. Um, One, which kind of for some people comes across as a little bit elitist, but is what it is, because it's quite a costly scheme to administer, to run, is that you have to have a minimum of 50k in KiwiSaver, NZ. And the second is you have to work with a financial advisor. And that, as I understand it, was a condition that they had in order to run a scheme like they're running, because it's there to kind of be a protection from people basically gambling away their KiwiSaver balance, you know, investing it in a way where they don't really understand what they're doing. They're just taking a punt and trying to make a quick buck. By having an advisor involved, it should help to stop that from being a thing. But as a byproduct, as a financial advisor, it's kind of up to you and your client to set asset allocation. So how much is in what? And I guess for many financial advisors out there, they'd much prefer to follow, again, like a model portfolio of, X amount in New Zealand shares, X amount in Australia, X amount in international, etc. And for someone that, for an end investor that doesn't have any strong conviction about anything or doesn't have really any idea at all, it is a much better approach than them just being in cash, as I see a lot, unfortunately. Like that is over a 15, 20-year time horizon. Good luck arguing that's the best call to be sat in 100% cash. Like if you're doing that over a 15, 20-year time horizon, frankly, you're crazy, or just crazily risk averse. Read some books. So that's kind of the typical approach is a model portfolio sort of approach. But if every single person had to be like that, that's really ruling by a lowest common denominator approach, because not everyone, while KiwiSaver is set up to help people have better retirements, that doesn't necessarily have to mean that KiwiSaver is every single person's only asset in retirement, because it's not true. Every single person I talk to has more than just KiwiSaver, or the vast majority do, fortunately. So, if you had really heavy concentration to even one asset in your KiwiSaver account, that doesn't necessarily mean that your entire financial picture is just concentrated to that one thing. So from a regulation point of view, from a best practice within the financial advice world point of view, insisting that someone has to be diversified or highly diversified or even diversified at all in KiwiSaver is just assuming that every person out there is not educated on finance, so isn't able to have a say in where their money goes. And two, it's also saying that this is kind of the only asset they have for their retirement, which is just not true, obviously, of everyone. So my approach to it has been, okay, yes, we can be substantially concentrated to the Bitcoin ETFs if you'd like, but I want to make sure that these people understand what they're buying. They've had ideally some experience. They've gone through some ups and downs, because the worst thing, and I know there will be people that will try and do it, is when we get to the peak of whatever this bull run is, which I don't think we're there yet, especially if the US implements a strategic reserve. We're definitely not there. There'll be people that, Bitcoin hits, say, 250,000. They go, oh, I've got 50 to 70,000 in KiwiSaver. I want to put it all in Bitcoin. We get a 40, 50% drawdown or whatever it might be. And then on the way down, they actually can't stomach it because they don't understand what they've bought, and they sell out, crystallize that loss, and they're in a worse position than they started. And as a financial advisor, you're wanting to leave people in better situations than you found them, not worse. So for me, it's, I do spend a bit of time with each client to understand their history with it, where they're at financially, because I don't want to be putting people into a position that's going to make them worse off, even if we all believe with any level of conviction that what we're investing into is superior long term.
Yeah, that's fascinating. So KiwiWrap, there are some requirements there to be able to choose your own KiwiSaver setup. But also, what is the situation looking like besides direct ETF exposure through some of these companies that are adopting a Bitcoin strategy? Because we now know MicroStrategy has been inducted into the NASDAQ 100, is it? Top 100. So in a way, if you've got any NASDAQ exposure, you're getting MicroStrategy exposure, which is Bitcoin exposure. So can you tell me a little bit about that, please?
Yeah, well, that's of particular interest. And I think that's of particular interest to any financial advisor that believes in Bitcoin, that would like to try and give clients exposure to it, but is finding the whole way that things currently are difficult to actually be able to do that. So it really kind of opens the door. I think, it's going to be a fascinating year this year, depending on if that strategic reserve does go into play and we do get supportive US legislation around anything crypto. Obviously, Bitcoin superior, but anything crypto, and how much that may open the door for other companies to basically copy what MicroStrategy is doing. And we're already obviously seeing that a bit. You've got Metaplanet in your neck of the woods on the Japanese stock market, which fascinatingly, really interesting looking at what happened with the share price for that with the whole Japan yen carry trade saga. Like the price went 10x. As a bit of an aside, it's maybe a longer discussion, we won't go there. I suspect that Bitcoin treasury companies might be the way that individuals bet against their own currency. That was kind of the real sort of indicator of it for me. But yeah, we've got Similar Scientific in the US. Obviously, you've been doing similar, and you've got more and more companies starting to buy and look at holding Bitcoin as a treasury asset. So you've got Rumble took a 30 million stake or position, Bitcoin. Obviously, a lot of the mining businesses, yeah, more and more companies looking at it. And I think if you've got, a supportive regulatory environment for it, then that just opens the door for others to feel like they're not part of the minority or a vulnerable minority, were they to do the same thing. And so I think what Bitcoinization looks like over time is I think you start to see, and I know Michael Saylor's talked about this a bit, and he's made some comments that not everyone in the Bitcoin community loves, but he's talked a bit about how he thinks there'll be a bit of a normalization in returns between share market and Bitcoin over time as more and more companies just start to adopt it and buy it and hold it as a treasury asset. And so I think that also is a factor for how you get hyper Bitcoinization, is you've got more and more companies buying it, holding it, which means more companies actually starting to think, well, how do we accept payments in terms of Bitcoin? And then kind of snowballs from there. Obviously, not many people, everyone, I don't know if you've talked to anyone that offers payments via Bitcoin that's actually received much Bitcoin from as a form of payment, because I think most Bitcoiners would rather get rid of fiat currency rather than essentially sell their Bitcoin. But yeah, that's going to be a huge driver, and I think that'll be a big story for this year. Again, caveating that with Trump being true to his word of having basically much more supportive regulatory environment for Bitcoin.
Yeah. Well, I think, just sort of looking to wrap up, but I think in terms of the nation state game theory, there's murmurs of other places starting to talk about it. And the cat is out of the bag of what Bitcoin is capable of. And it doesn't necessarily need to be the strategic Bitcoin reserve as promised. It just really needs to be some kind of non choke point situation, which clearly I think they're reversing that choke point approach. And so anything really is going to be okay, and it may just take longer or whatever. But I think what I see is these corporate strategies, they kind of are a bit of a foundation in the legacy world. And when you've got KiwiSaver funds that you can choose that are Bitcoin funds, and they're labeled as Bitcoin funds, it just starts to normalize things in the massive legacy world, which clearly that's where most people in the world still live in that world. And so I think it's all good for Bitcoin in the end, and being able to have these kind of regulatory setups that just give maybe people who are new to Bitcoin a bit of clarity, a bit of confidence that this isn't just some random internet money. I think all of that's good, and there's all sorts of things for different kinds of people. So I think, yeah.
I think it will continue to change a lot over time. ETF is like a simple structure that uses existing traditional finance structures to be able to get exposure to Bitcoin. But in a fast forward to a world where everyone's operating on a Bitcoin standard, no one's going to, or very few people are going to hold a Bitcoin ETF, because it's like holding a cash ETF or a cash exchange traded fund. No one buys a cash exchange traded fund as like a long-term investment. And so I think you'll probably see a point in time where these funds then try to actually invest that Bitcoin in Bitcoin companies looking to generate a return in terms of Bitcoin to pay as a return to investors in it, or basically people essentially pull out the value of Bitcoin that they hold in it, and they self-custody it or custody it through other means that are near zero cost.
Yeah.
Um,
Well, I think one mental model of looking at it would be, I see it as a bit of a scaffold where we're building this new citadel of Bitcoin, and kind of the legacy world. You got this kind of old structure, and this is the scaffold, and these ETFs and these products kind of enable you to build that scaffold. And in the US, you see murmurs around in-kind withdrawals. I don't know if that's been fully rolled out yet, but effectively being able to take
yep.
your withdrawals not in cash but in Bitcoin. And that would be a game changer because, the scaffolding kind of peels away and it leaves, you've got this pristine new building underneath.
It's a very good analogy, and I think you're right. I think that, what we do have currently is scaffolding, but you do have to have scaffolding for a period of time to build something, and it will evolve and improve from there.
Yeah, cool. Well, look, Joel, I appreciate you sharing your expertise and your thoughts on this and the awesome work you're doing. It sounds like there's only a few of you in New Zealand doing this kind of stuff, and certainly your company, Radical Investments, is helping people learn about this stuff. So if people want to follow your work, they want to get in touch, they want to maybe reach out, where can they go?
Best place to reach out is radicalinvestment.co.nz. In terms of following my work, we do have a Twitter profile. To be frank, it's very unused because I've been flat out busy basically helping people. I've had a lot of demand for advice basically over the last 12 months especially. So it's not been an area that I've put much time and effort into on the sort of public, the social side of things, but I will be active in there in future. You can also find me on LinkedIn, Joel Robinson on LinkedIn. Always happy to accept some connection requests. Really interested to hear from others that are au fait with what's going on with Bitcoin and involved in New Zealand finance in any way, shape, or form. There are definitely a lot of others out there involved in the world of finance in various different roles. Not all investment, that are keen to kind of see more development of the space. We're headed in a good trajectory, Cody. It's not all there yet, but we're on a good path.
Yeah, cool. All right, thank you very much.
Thanks.